While Western markets are expected to see slowdown and recessionary conditions in 2023, the picture is the exact opposite in Asia, according to experts. I have a bunch of experts to tell me how they see 2023 for Asia, India and the world. We'll start with Chetan Ahya of Morgan Stanley, and then we will have Sabaran Chakrabarti and Surendra Goyal of Citi India. But first up, Morgan Stanley's Chetan Ahya. Chetan, thank you very much for joining us. So you are expecting a bumper 2023 for China. You have just upped their growth forecasts.
Yeah, that's right, Lata. So we are expecting that, China's policy is they're making a big shift in their policy environment. They are focused now back on growth. They're working on multiple fronts. Firstly, they are going ahead with COVID reopening much faster than what everybody was expecting. Secondly, we're also expecting them to take up a concerted effort to revive the property market. And thirdly, there were concerns on the private sector sentiment because of the regulatory environment, which was kind of going against them. The government is now taking an effort to revive the private sector confidence and have slowed down that effort on regulatory tightening, particularly for the tech sector. So all in all, we expect China's GDP growth to be at 5.4% in 2023. So that will be a significant driver to region's growth next year.
Now, how does this impact India, Chetan? Does it mean another engine of growth in Asia and therefore positive? Or can it be a bit of a drag in the sense investors could move out of India into China? The wealth effect that we have in India could decline. How should we interpret it?
So I think from a macro perspective, this should be good for India because, generally what we have been highlighting is that for dollar to peak out, which it has already, you need two things. One is that the Fed rate hike expectation should peak, which has happened. And second is you want growth differentials between Asia and US to move back into Asia's favor. And with China's recovery, that will be actually further cemented. India and rest of the region were doing well, but China was a drag. And to the extent to which China comes back, that growth differentials will be attracting more capital flows in the region. And we already see the evidence of that happening. And just from the equity market inflows perspective, if you just look at 2022, because you had outflows in China, it didn't mean that there were inflows in India. They were selling in India too. So I think it's the overall emerging market sentiment that improves if China comes back and then India benefits on account.
Well, actually, I noticed, I mean, this is not your area, but you have mentioned it in your report, that you would go long CNH INR. That is, the Indian rupee will depreciate vis-a-vis the Chinese yuan. That's right? Will not that have some positive ramifications for Indian current account deficit?
Well, I think, this is more really a bullish call on CNH to the extent to which that China's growth will come back. And generally, we have found that in emerging markets, currencies are driven more by growth differentials. And so to the extent to which China's growth comes back, China recovers. And we also in the report have mentioned that when China recovers, you will see some upside to oil prices. And so to that extent, our strategist has been favoring CNH relative to INR.
Okay, got that. Now, you mentioned some risks, and that keeps coming back to me. Geopolitically, China has not been the most favored spot. People do want to hedge their bets. That China +1 is very much there. Would you say that there can be some big risks to Chinese growth trajectory from various things, including geopolitics?
So that's right, Lata. So we have been, as a team, talking about this emergence of a multipolar world. And that is driving the geopolitical tensions, and those are likely to remain. But the bigger driver or bigger problem for China for growth in the last 12 months had been their approach to COVID, the zero COVID policy approach, which meant they were continuously locking down, particularly from March, April, when Omicron hit the world. And at the same time, they had been tightening on the property market and taking up the regulatory tightening. So those are the three reasons why growth was weak. And right now, as I mentioned at the start, those are the three reasons why we see now actually growth coming back. So yes, geopolitics will be a concern, but the other three factors are more important when you're thinking about the actual numbers.
Yeah, I mean, I would assume that people don't want to upset the apple cart at this juncture, but you never know. Chetan, there's one more element, obviously, on which not many research reports are written because it's recent. Do you think the BOJ raising its rates, so to speak, raising the cap on rates, can be an added factor that may be negative for Asia in any way?
Well, we don't think so. Look, I mean, we've seen one round of impact yesterday of that change in BOJ's policy. And fundamentally, look, they haven't yet achieved their objectives that they had set themselves out for, which is to achieve 2% inflation sustainably. At the same time, if you look at the inflation rise or trend as of now, like for rest of Asia, even for Japan, rising core inflation, which has picked up to 1.5%, has been largely driven by cost push factors. Their GDP is about 1.9% below pre-COVID levels. So clearly this pickup in core inflation, which is again still below 2%, is also driven by cost push factors. Demand is not that strong. So we don't think that Japan is likely to take up a series of tightening moves that would then be a problem for Asia or even for global markets, bringing in a huge amount of volatility.
Okay, so probably it's one and done. Chetan, to come back to the point you made about oil prices, your report on China is reasonably bullish. After all, you all have raised your forecast from 5 to 5.4. Will this be bullish for all commodities?
So we distinguish in the commodity space between oil and non-oil commodities. So oil, definitely China has seen an impact of about 1 million barrels per day because of its growth slowdown and lockdowns, and that will come back. So our oil strategist is expecting that oil prices will get a $10 odd upside. Because of China's recovery that will come through from second quarter of next year. But for non-oil commodities, you need to get that infrastructure plus property sector investment to come back. And the numbers on that is that we're expecting the real estate plus infrastructure investment on a real basis to just rise to a modest 2% growth in 2023. Versus about 1% in 2021. So it's not a whole lot. It will feel more or less similar to where we were in 2022 when I mentioned 1%, that was 2022. So it's going to be a modest rise next year in real estate infrastructure. And that's going to hold back the demand for non-oil commodities from China.
No, this becomes very important for India, isn't it? Because we are a big importer of crude. Now, therefore, I wanted your view on the Reserve Bank. We got the Reserve Bank bulletin for December, and there is this piece by Dr. Michael Patra insisting that they are worried about services inflation, core inflation, which they think can be sticky. And plus, you're talking about the likelihood of oil not really collapsing, probably even rising a bit. So what is the interest rate scenario in India that you're seeing? One more, two more hikes?
So, our India economist, Upasana Chachra, is expecting just one more rate hike. And our approach is that we think that RBI will try to keep real rates around 100 basis points. And we expect inflation to moderate towards 5.5% from March of next year. So that kind of creates a space for RBI to just do one more and pause there. And also note the fact that we are expecting the Fed to also be sort of stopping to do the rate hikes from February. And we are expecting the dollar to remain weak So that creates the space for RBI in the sense that you would not have increased upside pressures to inflation via currency depreciation.
Thanks very much, Chetan. Have a great 2023 yourself. And now, after the break, the Brains Trust of City India will be with us to share their 2023 outlook.